Assalamualaikum and good evening, everybody. Okay, sorry for delay. We just want to make sure that everyone has properly set their audios and visual. So as usual, tonight we'll cover some of the ones that you see right now. We'll talk about a little bit of introduction to Forex, um, some trading setups towards the end as well. Okay, so everyone, are you guys okay with the audio and visual? Is that good? So we can. Okay. All right. So if everyone is good, then let's just carry on. Okay, so tonight is the continuation of what we have talked about last week on the webinar. So whoever didn't join that, you can actually access that in my YouTube channel. You can ask the admin later for the channel itself. Okay, so before we do start, I think it's good to introduce my team to you guys. So we'll talk about smart trading as a team. Who are we and what are the things that we provide for people who are just starting to learn and also just starting their career as a Forex trader. And then later on, we'll move on to a little bit of introduction to Forex, just a quick guide on for the new guys on what to do your startup from here on. I'm going to cover a little bit of the MetaTrader itself on the computer, and it should be more or less the same with the phones as well. If we do have time, we'll go through candlesticks formation, and then finally we'll move on to the trading setups that we need that I'm going to teach tonight. It's basically based on Fibonacci. So we'll talk about initial breaks such as engulfing and dominant breaks. What are the things that we need to do for confirmations, and how do we apply this in the live trades? If we finish a lot earlier than expected, then we'll talk a little bit of money management for those who just started trading, and then we'll just crack on from there. Okay, let me just go through. Okay, let me just share this for you guys. Okay, basically our team is smart trading. Just gonna go quickly on this one. We don't want to waste too much of our time. So what we do is we provide everyone with a range of services which we actually use for Forex. And most of the members are more than 10 years and about 10 or 5 years experience. So most of the analysts are on a different background. However, most of them are technical analysts. We'll talk about that later on. And we provide educations and also mentoring services for those who are really interested to learn as well. So you can talk about that later on with the admin. So this is our services. We provide VIP signals, copy trade, and also Forex education. Okay, so I think most of the guys already know our past results. So usually on a monthly basis, we try to achieve about 3,000 pips. So for copy trades as well, so it's just pretty much straightforward. We aim for a minimum of 30% ROI every month, and the profit sharing is 20%. So you can look at our statistics in the links that we have provided in Facebook as well. Okay, so sorry about that. So these are the education that we provide for everybody. So we have instructors that teaches Fibonacci, support and resistance, supply and demand, harmonic pattern, and also the basic Bollinger Band and moving average, which is BBMA, is the technique that I use personally. So if you are interested to learn with us, just tell the admin later on. And this is us. So basically, most of the team are here. Just gonna talk through. So our head of admin is obviously Joe. Some of you might know him. And Remy here, Ticketing Butcher. He teaches Fibonacci. Rodin is from Malaysia, 10 years of experience, and he teaches support and resistance. We have Juan, he's 23 years old, the youngest in the team, and he's teaching BBMA. It's probably about 11 years experience in forex trading. Also, we have D, also known as Kyo. He teaches support as supply and demand. All right, so these are the rest of the team. We have people from the Philippines as well. I think most of you are already familiar for those from the Philippines. Okay, that's enough about us. Let's go back to the introduction to Forex. All right. So the most simplest way to learn Forex is basically actually free. All right. Somebody message. Can somebody help see tank on it? It doesn't have audio. All right. So for those who are just starting to learn Forex, the best and the most simplest and free way of learning how to trade Forex is in babypips.com. All right. I tell this to everybody. It is free. You just log into the website, and basically everything that you need for beginners is here. So what you need to do is when you log to the website, you just go to education and you click on how to trade Forex. All right. Once over here, you have a lot of courses that you need to learn. So you basically start from, what is Forex, how do you trade Forex, when can you trade, and who trades Forex and stuff like that. And then on kindergarten, it talks about the brokers, the type of analysis, the type of charts, and as you move along to the courses, it gets more in-depth in knowledge. However, for beginners, I highly recommend that you go through courses 1 until 3, and from courses 3 onwards is probably best to find somebody to guide you, or someone who is experienced, or perhaps someone who actually teaches around your area. All right. So, okay, I'm not gonna dwell too much because most of the things about Forex introduction I already talked about from the previous session. So you just go through the Blackout YouTube channel, just look for it. All right. So let's go back to the main thing. So we're gonna do a little bit of MetaTrader familiarization again, just a quick one. Okay, all right. Okay, so I'm just gonna change a little bit of the color just to make it a lot simpler for most of you. Okay. Okay, let me just. Alright, so I'm just gonna save this template. Alright, okay, let me just share the screen for you guys. So this is basically what the MetaTrader looks like. So we're using Tifia on this particular webinar. So the most important thing for most of the traders to know is how you logged into the accounts, how you make accounts, stuff like that, and what are the tools that is provided here for you on the MetaTrader. So regardless of whatever broker that you have, most of the MetaTrader are pretty much standard. All are pretty much the same in terms of the setups that it has. So what you're looking at right now, there are two particular information that is really important for every trader to understand. Is there are two axes you have at the bottom and on the right hand side, the X and Y axis. So basically on the bottom side, it tells you that the date and time of the particular time frame that we're looking at. So when I talk about the time frame, this is probably the most important thing for a trader to understand. There are few time frames available here on the top. So you can see over here when I press this tab, it shows us Mike November, which is monthly. So monthly time frame tells us that these candles over here, each of these candles are being formed over a period of 1 month. All right. So over here, W1, so that's weekly. So each of these candles are being formed over the time period of 1 week. So basically the markets move from left to right. As you can see, it started from 9 July on the bottom of the left hand side of the screen, and now it's at 17 March shown here. Okay, so over here on the right, this is the price of the particular market at this time. So basically this gray number over here, that's the actual price when the market closed on Friday. So for those who are just starting to trade, the market is closed on Saturday and Sunday. So basically when we talk about monthly, there's only about 20 days minus the weekends, and also on the weekly there's only about 5 days worth of trading day. Okay, so when you look at the daily time frame, then obviously all of these candles are being formed with the span of about 24 hours. Alright, so when I mark this candle over here, the Friday candle, there should be about 24 candles worth of H1. Alright, so H1 is obviously 1 hour candles. So you can count it from here to here. There should be about 24 candles. Okay, other things that you can use that is you can pretty much show the period separator just to show the day. So obviously, as you can see, this here is from here to here, that's 1 whole day. Okay, alright, so when we go to M30, that's 30 minutes of each candle. M15, that's about 15 minutes. So and M5, 5 minutes, and M1, 1 minute. Alright, so let me just quickly check. Alright, so I'm not gonna go through too much on this because we already covered this from the previous session. So what I'm going to talk about tonight is a little bit, there's two setups I want to share to you, which is the engulfing setup, the initial break setups. So there are two, but beforehand, if you guys have, you can take a screenshot, so you can use this to set up your phone or your desktop for the Fibonacci settings. Okay, so over here, as you can see, there is a percentage and a dollar sign. What it does is basically when you put that into the system, that is basically going to give you the price level of that particular area. So let's just try it on the MetaTrader. Okay, so let me just pull a Fibonacci. So you go to Fibo properties Okay. So over here, as you can see, it shows us the level of that particular area, okay, on the Fibonacci settings. So when I add that on the description, the percentage and the dollar sign, it actually shows the price over here. So this will work in your computer and also your mobile phones as well. So I'll give it 5 seconds or 10 seconds for you guys to take a screenshot of the settings so you can key into your MetaTrader. Okay, so let's move on. So just a quick run through over here. There's a lot of settings over here. There's a lot of levels. So today we will not be talking about those levels, but I'm just gonna give you a brief functions of those levels later on, so you can actually use that as a guide. All right. So tonight we'll be talking about the two types of initial break, or abbreviated as IB. So the first one is engulfing break, and the second one is a dominant break. Okay. So what is an engulfing break? So basically, an engulfing break is a candle, the previous candle is being engulfed, or there's a much more bigger candle that happens after it. Okay, so when we talk about this, basically we have a buy candle over here, which is the green color, and the sell candle over here, which is a lot bigger than the buy candle over here. So this is what we call an engulfing break, 1 versus 1. So engulfing break, there are two, so it can either be 1 versus 1 or 1 versus 2. For this example, this is the IB zone from the candle open to the candle close. All right, so basically two candles managed to break the IB zone of the buy candle. So this is what we call bullish engulfing break. Okay, so for dominant breaks, it's much more simpler. So basically we have a buy candle over here, and we have mark from the candle open to the candle close, the IB zone. So basically in dominant break is 1 versus 3 or more. So it can either be 3, 4, 5, or how many numbers there is to break this particular buy candle. All right. Okay, so the engulfing break setup is either 1 or versus 1, or 1 versus 1, or 1 versus 2. So this is an example of a bearish engulfing. So basically what we're looking at over here is an uptrend. So the market is going up, and then this is the highest candle at which there's a bear candle, a sell candle, that managed to break the IB zone. All right. So this is what we call a bearish engulfing. All right. And over here is also the same, because here we have 1 versus 1, and the other side we have 1 versus 2. So what does this mean to us? So a bearish engulfing means that, you know, this is the end of the uptrend, and we know after this the market's going to go down. All right, provided that the setup is not being broken. So we'll talk about those validities later on for confirmation. Okay, so um, over here we have a downtrend. We have a sell candle over here, and right after that there is a big buy candle that broke the IB zone from the candle open to the candle close. That's the IB zone. So there's a big buy candle. So this is 1 versus 1. So this is what we call a bullish engulfing. So this tells us that, after this the market's gonna go up. It's the same here as well. There is 1 versus 2 as an example. So let's talk about dominant break setup. So I'm just going to finish these 2 setups for you guys, and then later on we'll move on to the charts. We can look into what has happened since Friday, so we can look up for some of the sell setups. We can do some examples as well. Alright, so for dominant sell setup, there is an uptrend over here. So we have a big, huge candle over here, which some people call the mother candle. And then right after that, there are 3 sell candles that managed to break the IB zone. So this price line, this is what we call the breakout. So basically, this is the price at which the sell candle has managed to break through from this buy candle. So this is very important. As long as there is no candle that managed to break through the mother candle, it's still an uptrend. All right. However, once there is a breakout, it tells you that after this the market's gonna go down. Alright, so it's the same here as well for downtrend. This is the huge sell candle, opens at the top, closes at the bottom, and then right after that there's 3 candles or more that manage to break the IB zone. So this is what we call a dominant buy setup. Okay, so it's very important. It's 3 or more. If it's less than 3, it's 1 versus 1 or 1 versus 2. That's a bullish, or that's an engulfing setup. Okay, so for confirmation of the engulfing setup, we call it the CB1. So the CB1 break is a signal of confirmation for the change of trend for an engulfing setup. Okay, so over here at the bottom we have a bullish engulfing setup. This is a 1v1 setup. This is the IB zone. All right, so what this diagram tells us that there is in a CB1 previously before that, which is usually the resistance level before that. So as soon as this resistance level before this happened, once there is a candle that managed to break this resistance, which we pretty much call the CB1, this is a confirmation at which the market is going to go up. Okay, so when the market goes back down to the IB zone, this is what we call the engulfing break retest. So this is the point at which we entry the market for buy. Okay, so in this particular pattern, there's a downtrend, and then the market went back up, and it created a point of entry for sell at that point, and then the market went down. All right, this is the pattern of ABC pattern over here. So basically, the B point is where the CB1 is identified at. All right. So as soon as there is an engulfing at the bottom here, the most important thing is to make sure that this CB1 has been broken by another candle on later on as the market move. So we'll just have to wait until there is a confirmation. Then when there is a retest back to the zone, that is the buy entry. All right, so is everyone clear with the engulfing setup, or you want me to repeat that again? Okay, I'm just gonna repeat it one more time. All right. So basically, this is a downtrend over here. The market went down to point A, and then it went back up to point B, which actually created a point of entry for sell. After that, the market went back down. So it actually created an ABC pattern over here. All right. So we all know that this is the point when the market didn't manage to break through to go up. So this is now what we call a resistance point. All right. So when the market went down, it created the buy engulfing. All right, the bullish engulfing setup. So over here in this example, this is 1v1 engulfing setup. So the most important thing for engulfing setup is pretty much that we need to make sure that the CB1, the point of resistance beforehand, was being able to broken by the buy candle on a later stage. As soon as the candle managed to break through this point, then this is a confirmation that you know that the market's going up. So when it does retrace back down, this is the market's giving you a chance for you to go for buy. Okay. All right. So let's go to the engulfing setup again. All right. So this is an example. So over here, this is the A, B, and C pattern over here. So basically, this is the CB1. This is the point at which the market, this is the resistance. Okay. All right. So over here, you look at this candle. This is 1v1. So this is the IB zone. So the IB zone is the point of entry for buy on this particular setup. So when you look at this candle over here, the next candle went back down, and the next candle went up, but it managed to break through the CB1. So it's a very small area that it managed to break through. So this is a confirmation that you know the market's going up. So when the market went down, that is the point at which we need to go for buy. Okay. So so how do we apply the Fibonacci in this particular setup? All right. So for engulfing breaks, the most important thing for us is to identify the CB1. All right. So from that CB, we take the candle body of the candle that managed to break the CB1. So this is CB1, and this particular candle over here is the candle that managed to break through CB1. So we pull the Fibonacci from here to the lowest wick. Okay, to the lowest wick or the lowest shadow of the particular area. Alright, so once we pull that Fibonacci, then it will show the projection of the market where it's heading. So basically over here, this is the first TP, which is the take profit, and this is the second take profit. So usually for newbies, it's pretty much a very good idea that you set your TP at first TP first, and then if you have multiple layers of entry, maybe you can TP some and just leave one or two for TP2. Alright, so it's very important that you understand these TP projections for the Fibonacci. So everyone clear with the engulfing breaks and how to apply the Fibonacci? Later on after this, we will do some exercise or examples over the MetaTrader, so you guys can actually learn how to pull the Fibonacci. Alright, so let's go through for the dominant setup. This is much more easier. So the dominant setup is obviously 1 versus 3 or more. Okay, so basically this is a downtrend market, and you have a big sell candle over here, and after a few hours, after a few candles, the third candle or more managed to break through. So this is a confirmation that the market's going up after this. So the most important thing here is we need to mark the 50% of the dominant candle. How do we do that? So basically we take 50% of the candle body, and that's pretty much the 50% of the dominant candle. Alright, so you wait when there is a confirmation over here, there's a breakout, then you wait until the market goes down, that is the point of for entry for buy. All right. So just a quick example over here, downtrend. You have the biggest candle over here, and you have 1, 2, 3, 4, 5, 6, 7. 3 or more candles. 7 candle managed to break through this dominant candle. All right. So this is now the area at which we call the IB zone. So the IB zone is now the entry zone for buy. Okay, so all we need to do is to wait until the market goes back into the zone, and that's the point of entry for buy. All right. So as you can see, there's a breakout, the confirmation that the market is going up, and then after that there is a shadow that actually goes back in. So this is the point of entry buy. And how do we pull the Fibonacci is very straightforward. We pull it from the candle body that managed to break through the dominant, which is point A over here. So this candle managed to break through the dominant body of this candle. All right. And then from here we pull it to point B, which is the lowest peak or the lowest shadow at this particular area. So as you can see, after you pull the Fibonacci, it will give you the TP projection from TP1, TP2, and obviously the TP3. Okay, so let's just go through some of the examples. All right. So let's go through engulfing setup. USD CAD. So over here. So basically what we can see over here, the market is going up, alright? And then finally there is a buy candle, and then there is a sell candle that managed to engulf this sell candle. The buy candle. So from the candle body, from the candle open to the candle close, this is what we call the IB zone. Okay? Excuse me. So for the engulfing break, we do need to identify where is the CB1. Okay? So the CB1 is obviously we have A, and then we have B, and finally we have C over here. So this is what we call the CB1. Okay? So when we look at this particular example, the way we pull the Fibonacci is from the candle that managed to break the CB1 candle body. So basically we click this Fibonacci retracement. Alright, we drag it here to the candle close, the candle body, and we pull it to the highest wick over here. Alright, so now what you can see, this is now the Fibonacci for sell, because we have a bearish engulfing over here. So what does this market is trying to tell us? Alright, so what it's trying to tell us that there is already a confirmation that the market's going down. Alright, and the point at which the market is gonna retest at some point, not soon, or sooner or later, it will try to retest this area and actually go for TP1. So when we look at this, the way we project this market is obviously the market is gonna go up there, and it will head for TP1, or from here on it will try to go from TP1. So this is the things that we need to make for our analysis. This is how we do our analysis. Alright, so usually based on my colleague Radin, what he advised to me most of the time is, when you do entry, let's say for example you do entry at this level, let's say you do entry for sell, you need to make sure that you know how much is the area. So we're looking about 45 pips at this particular area for a zone for entry sell, and from that we calculate another 30 pips for our cut loss. All right. So basically, this highest wick is obviously the area at which, if the candle managed to break through, then this setup will be invalid. So let's just say that the market went up here. So let's just say this is a buy candle and it closes here. So this setup is invalid because afterwards it's going to go up. All right. So this is how we identify the validity of the setup itself. Okay, so that's a bearish engulfing setup. All right, so still in USD CAD, if we look into the H1 time frame, there's also another setup available for us here. So also the same, the market is going up and there is a huge mother candle over here. Okay, so we mark this full body. So this is what we call a dominant sell setup, because this huge buy candle is being broken by the sell candle over here. So it's more than 3 or more. All right. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's a lot. All right. So this is a dominant sell candle. How we pull the Fibonacci is from the candle that managed to break through the dominant candle to the highest wick. So this is how we set up. So the area for sell is obviously at this particular area. So there hasn't been any candle that went back to this zone. So this zone is still an active area for sell. So what you can do is you can pretty much mark 50% of it. So as soon as the market is pretty much in this zone, that's where you need to go for sell. Alright, so before we even think about going for sell, we're looking at the time frame H1. We need to make sure that we know how big is this zone. So the zone is about 30 pips, alright? So if your zone is about 30 pips and you need to have a leverage of about, let's say, 20 pips. So this is now your cut loss area. So when the market broke through, let's say that there's a candle that managed to break through this zone, then it's an invalid setup. All right. So as long as the zone is not being broken by any buy candle, then it's still a valid sell setup. Okay. So when we do this trading, we need to make sure that we calculate the risk and rewards that we have. So basically, if we enter from this point, we need to calculate from here to our stop loss area. Okay. Okay, let me just set this up. Okay, much more clearer. Alright, so let's just say we enter from here and we need to calculate our risk. So the risk is about 35 pips. So if you entry sell, let's just say 0.01. Okay. So if you entry sell 0.01 over here and the market went up here and it breaks this area, so you actually lost about $3.50. And your rewards is when it reached the TP point, which is about minimum 70 and about maximum 90%. So 90 pips, sorry. So that's about minus $3.50 to plus $7 plus $9. So you actually know your risk and reward. So the risk and reward in this particular setup is about 1:2. All right, because you're losing $3.50 over here, and you're probably gonna earn about $7, $8 over here. Okay. All right, so let's just have a quick 5 to 10 minutes break, and then after that we'll continue again with the examples. Okay. All right, let's continue from where we left off. Okay, let's go through again some of the examples. So let's go to UJ. So USD JPY. So when we look at weekly time frame, what can you guys see? What particular setups is available for us? Anybody? Bull what? Bull? What setup? I didn't tell you bull or bear. I talk about engulfing or dominant. That's what we talked about just now. It's not buy or bull or sell. We are talking about dominant or engulfing. So what particular setup are we looking at right now? Dominant break for buy or sell? Okay. So where's the dominant break for buy? Alright, let's cut to the chase. We have a downtrend over here, right? So when you guys talk about dominant, dominant is what? 1 versus 2, 1 versus 1, or 1 versus 3 or more. So over here, this is the lowest point the market has reached, alright? So this is a sell candle and this is a buy candle. So what is this? Is this 1 versus 1, 1 versus 2, or 1 versus 3? Over here. 1 versus 1. Okay, so this is an engulfing break, not a dominant break, alright? So this is the IB zone. And we were gonna look out for the CB1. Okay, so the CB1 is the point B, right? So A, B, and then C. So this is the CB1. So we pull the Fibonacci. So over here there's a confirmation that this is an uptrend. So this candle has managed to break through the CB1. So we pull the Fibonacci from the candle body right to the lowest wick. Okay, alright. So as you can see, the market has gone up, alright, TP1, TP2, and even TP3. Okay, sorry, let me just make it longer. So as you can see, the market even reached up to TP3, and then when it goes back down here, finally it is the first time that the market has retested this engulfing break zone. So the market went back up again. Alright, so there's still validity of the market going back up here again. Okay, so let's do another exercise. Let's go to daily. Okay, just zoom into this particular area. What do we have? So over here, let's just go through this point here. Okay, so over here we have a dominant setup because there is 1, 2, 3, 4, 5, 6, 7. So there's 3 or more candles that manage to break this area. So this is what we call a dominant buy setup. Okay, not a bull or a buy setup. Alright guys, and over here what do we have? Is this a dominant or engulfing break setup? Okay, so over here, this is the highest candle, so this is the IB zone. Okay, so in this example, we have 1 versus 2 candle breaks, so we need to find the CB1. Alright, so the CB1 is actually over here, not this one, because this is within the candle body of the engulfing break. Right, so this is where the CB1 is. So this is the candle that actually managed to break through this CB1. Alright, so by right, the Fibonacci should be pulled from the candle body to the candle wick. Alright, so there are two particular setup over here. We have engulfing, bearish engulfing over here. Okay, and we have a dominant buy setup over here. Alright, so there are two particular setup that we are looking at. At the moment, this is the zone for sell for this bearish engulfing, and this is the point at which we need to decide whether it's going to break this base or is going to return back. So this is your cut loss decision point. Okay, so let's just say, for example, that you sold over here knowing that this is the actual sell zone. So when the market goes up, we need to wait until the candle managed to break through. Let's just say tomorrow the candle managed to break through like this and it closes like that, then we need to decide to cut loss. But if it reverse, for example, and retest back to this zone, so we know that that there is also a buy setup available here. Okay, so let's just delete that. Okay, so let me delete this Fibo. Now we look into the buy setup. Right, so dominant is pretty much straightforward. Whichever the candle body that breaks the dominant, that is where we pull the Fibonacci. So if we take this candle body and then we go to the lowest wick. So as you can see, basically what happens here is this is the initial break. Alright, there's a confirmation that this market is going up, and then afterwards it goes back down. As you can see, it managed to retest on that zone. So this point is actually the point of entry for buy. Okay, so when the market actually went back, as you can see, it's on the pullback level. So pullback level is usually where there is a point of entry for buy or sell on the Fibonacci. Alright, and this areas here is actually the base or the best zone for sell, for the entry for buy. Okay, so based on this information, let me just delete that. We know that the market retrace and is heading for this area. So that is where it's going for. Okay, and if you look further away, there is yet another setup available for us on the daily. You have another dominant setup over here. Let me just delete this. Okay, so it's always important when you're using Fibonacci to use always look to the left. Okay, there's always information on the left. Okay, so this is also dominant because you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 9 or 10 candles have managed to break through. So this is a dominant buy setup. You pull it from the body to the lowest wick. Okay, so as you can see, the market has gone back. The market has gone back to the zone for the entry. So this is the first time the market retraced back for the buy entry for this dominant buy setup. Okay, and now it's at the TP1 area. All right, so it is now a decision area whereby is the market going back down or going up. Okay, based on this level over here, it states the reversal zone. Okay, so the reversal zone over here, as you can see, if you can read this clearly, there is an information over here. Okay, this information over here, this is a support area where the market has tried to go down. It couldn't manage to break through, and then finally it managed to break through. So this is what we call the breakout. So when we learn a little bit of support and resistance, so this is now what we call a support. Okay, that's too big. Let me just, okay, so this is now the support, and then where it's heading right now is the resistance. Okay, so on next week we will be learning a little bit of support and resistance. I'm just gonna go through a little bit right now. So this is what we call an SNR flip, support and resistance flip. Basically, this area is the support right now, and finally there's a breakthrough over here. So at some point after a few days, as you can see, weeks over here, the price has went back through this particular zone. So this is now the resistance point. So based on this information, we know the market is going there, and by which there is a decision point to make. It's either going to go back down or it will try to break this resistance again. Okay, so where if the market is going up, what is it trying to do? So basically it needs to break this support, because over here you can see there is another dominant sell setup available over here. Okay, so this is how you actually project where the market is heading. Okay, so I think that we have done a lot of examples. You guys want to do another one, or are you guys clear with dominant break and engulfing breaks, and how you project, how you use the Fibonacci to project the TP points and where the market is heading? Is everyone clear? Huswan asking for more example. It's now 9:30. Alright, I'll give another example, and that's the last for you. I need to play Mobile Legends after this. Okay, alright, let's look at Euro GBP. Oops, sorry. Okay, so Euro GBP, we have a dominant or an engulfing break over here. So what do we have, people? Talk to me. Okay, so people, let's talk. What do you see? So over here on the far left, we have an engulfing break, right? Okay, so for an engulfing break, we need to find, what do we need to find? We need to find the CB1. So basically the CB1 is this point, and this is the candle which managed to break it. So basically how you pull the Fibonacci is from this, to the highest week, right? So basically what's happening right now is the price has already reached the TP2 area. Okay, so this is, let me just change its color. So that's for sell. Alright, so this is the IB zone, okay, which has been tested for a lot of times as well. And over here at the bottom, what do we have? Do you have engulfing or dominant break? What's CB1? Okay. Okay, at the bottom we have this longest candle. So this is what we call what? Dominant or engulfing? Fucking hell, Trevor. This is a dominant, not engulfing. Dominant is 1, 2, 3, 4, 5, 6. Is 3 or more. Okay? So remember, engulfing is 1 versus 1 or 1 versus 2. Dominant is 1 versus 3 or more. Don't get it wrong. I'll punch you in the nose. Okay? Anyways, alright. So we're looking at a bidominant over here. So we have 1, 2, 3, 4, 5, 6 candles that managed to break through this dominant candle. And the way we pull the Fibonacci on this is basically from the candle that managed to break it to the lowest wick. Okay? So let me just color that blue. Okay, so that's the buy Fibonacci. Alright? So as you can see, the price is right now on the buy zone of this particular dominant buy setup. And it also tells us that this is already at TP2 for the sell setup. Okay? So what it means for us that the market is trying to go here for the TP1 of the buy setup, and the information that is available for us over here is there is support and resistance at this particular level. Alright, so we know that at some point the market couldn't manage to break through this area, so this is what we call a support. There's a breakout and now becomes a resistance. Alright, so this is another example of SNR flip. So support, breakout, resistance. So now the market's going back up here to test this particular area, and if managed to break through, then obviously it's gonna go to this zone again. Okay, alright, is everyone clear with this example? I think that's it for the trading setups. The next is we'll talk about money management and how you are going to use, how you're going to trade and stuff like that. So for money management, I will be using a very good example. One of my students, she is Ivy Wong from Malaysia. So forgive me for using you as an example. So basically, this is for most of the people who do personal coaching with me. This is how I monitor them. So they will have their own accounts, so and then they can do some of the plannings that they need to do for trading. Okay. So the most important thing when it comes to trading, all right. The most important thing when it comes to trading is that whatever I teach you just now, whatever technique that you're going to use for trading to find your setups, the most important part, this trading techniques is only about 20%, alright, of your trading, alright, 20%, 20 to 30%, alright, and then another 30% is based on money management. Okay, and the final 50%, which is the hardest of all, is the discipline. Alright, so this is the most important thing for a trader to know. Alright, whatever technique it is that you're learning, regardless is Fibonacci, regardless is support and resistance, regardless hoping technique, it doesn't matter what technique it is. At the end of the day, it will only consist about 10, 20 to 30% of your success in forex trading. The rest is 30% on money management and 50% on the discipline. Okay, let's talk about this two things, money management and discipline. Alright. Alright. All right. So the most important thing that I usually share to most of the people, the friends and families, or whoever this is learning from me, there are four things that I always set to them. The most important thing is you need to understand, you need to know who you are. You need to define what particular trader you are, because this is the most important thing as a trader. All right. So trading techniques, there are trading styles, there are three. I wrote it down here. So basically these are the three trading styles. Scalping, as a scalper, basically you will be looking at the time frame of H1, M15 and M5. Alright, so you're looking at a fast pace time frame. Alright, and your projection for take profit should be about 10 to 20 pips or max 30 pips. When you talk about intraday, so basically you're looking at setups from H4, H1, and 15, and your target should be about 30 to 60 pips. And if you're a swing trader, then basically you need to look into setups at daily, weekly, and monthly, and your target should be 100 pips above. Okay, so these are the different styles of trading. For those people who are busy with their daily lives, basically when you wake up at 5, you send your kids to school, you go to work, and then you don't even have time for lunch, and then you go back home maybe 8 or 9 in the evening, and that's the only time you're going to use for trade. I think the best option for you is to become an intro or a swing trader, because you don't have much time to look into the market all the time. So this is very important. So you really need to define what particular trader you are. If you manage to define which particular person you are in accordance to what you do every day, then you can set your targets. Okay? So when it comes to forex trading, I really emphasize on people to think about this very seriously. Forex trading is not a hobby. It is very important for you to put in your brains that this is not a hobby. It's not something you do on your spare time. When you do forex trading, what you need to tell yourself is that you're building a business, you're doing a business. So this is the most important thing. This is the most the priority that you need to set yourself up for the targets, because if you don't set yourself targets, you don't know what you want to achieve at the end of the day. Okay, so if you don't set yourself targets, you don't know what do you want to get from this forex trading. Forex trading is not not like you just go in one day and you become a millionaire the next day. It's not something like that. You need to treat this with respect, and you need to treat it properly. You need to be able to plan on what are the things that you need to set in place for you to achieve your targets in the market. It's the same as doing a business. Let's just say that you are opening a restaurant. First, you need to get a place, you need a proper menu, you need people who can actually cook good food, and you need a lot of things. You need capital and stuff like that. You need to pay the bills, and this is exactly like another business. But fortunately for us, when we do forex trading, we don't need to go through all those things. All we need to do is a little bit of knowledge on how to enter the market, how to project TPs and stuff like that. And you need a little bit of capital. You need a smartphone and internet. That's it. You don't even need to have a license to start forex trading. Alright, so it is very important to set your targets. Alright, I will go through that afterwards. Once you have set your targets, then you know what particular money management that you are going to do. And once all of this are already set in place, then the discipline comes in. This is where you need to be very strict about the things that you do. You need to be very disciplined in terms of how you wanna decide on every particular trade. What are the risks and rewards that you set for yourself? Okay. So let's just go through here. This is a good example from one of my students. So what she does is, I told her that in order for you to grow your money, you need to be able to set yourself a target. So what she did is she set she set herself up for a 30% monthly target. All right. So basically, if it's $100, you need to grow your account by $30 a month. So let's just say you have $100 and you want to set up yourself for a 20% per month. That's only about 20 USD per month. Alright. So the most important thing, when you already have this information, in a month there is about 20 days worth of trading. Okay, because there is no trading on the weekends. So basically what you need to do to achieve this 20% is very easy. You only need to earn 1 USD per day. So when you set yourself up for this, then this is a much more achievable goal. Alright, so this is very important when it comes to planning. Alright, so you need to really set yourself targets, and you need to set a plan on how to achieve these targets. Okay, so in order to achieve these targets, she set herself up for an intraday trade. So basically she's looking at an H4 type of setups and looking for 30 to 60 pips, for example. As you can see here, dated last year on September, she first started with $50 USD, and her target was about 30%. Okay, so on her first trade, as you can see, her first entry was at 0.02, and her daily net target, the target that she wanted to achieve was about the target that she managed to get is about 135 pips, and from this she managed to come up with a gross profit of $27. So what I told her, that every time she makes profit, she puts half, she withdraw half of it and she retains half of it. So her account is growing and she also do withdrawals. Okay, so over the period of a month, basically I asked her to create a journal. So basically on each of this journal, she needs to write down what particular entry, what particular setup is she going into, and what's her target, and how much did she win, how much did she lose. And at the end of the week, she needs to make sure that she writes down her statistics. So basically, how many trades did she win, how many trades did she lose. So this is very important for you to grow your account. Okay, and eventually she actually managed to grow her account more than 100%, because she managed to withdraw $54 and also managed to grow it by 54. That's about that's about 200% growth over there. So on the next account, because she managed to grow her account and she start another $50 account, and she managed to grow it by about 80%. She did the same thing, going through what setups, what is our target, which pairs did she enter, and how much did she lose. And she put in the statistics over time on her second account. Then after that, she opens another account and she do the same thing. And this time she opens a $100 account. Alright, she didn't really do well. She only managed about 40%. However, when you look at it, she's only trying to grow it by 30%, and she's still above her target. Okay, so the most important thing in here is that apart from jotting down the statistics, the most important thing is you need to have a file, or you need to record your analysis. Alright, so basically what she did here is she created a folder that she puts in all her analysis. So basically what she tells here in GBP CHF, that there's a re-entry zone for sell. Alright, so she followed this. She She was, this is how I understand her thought process, and she's waiting for some setups, and she finally entered sell. So she puts the picture of before and after her analysis. So what this does to you is it builds your confidence level, because every time you succeed in your trades, it actually helps you, it actually builds you, because forex trading is not about talent, it's not about being lucky, it's about consistency and experience, and what you do with when you lose trades. So that's very important. So over here, this is what she had started on February. So she started again with $50. So on her fourth account, still maintaining the 30% monthly, she still managed to grow it by 80%. As you can see, her statistics is getting much more better as time grows. So I hope with this example, it can be, you guys can be able to learn from this. For those who wants to learn more on money management, on wants to learn more on um, techniques and stuff like that, then you guys can contact our smart trading representatives. We have our team in the Philippines, Eric and George. They're helping me out over there, so just contact them. For those from other countries, we have in Trinidad, we have Jerome, so he can help you out as well. So just contact the person who brought you into the webinar, and they'll be able to sort you out. But if you guys just go in direct through us, then just contact my admin and tell them later on. Before we conclude, we are going to do the lucky draw for the winners of those who actually registered their accounts. So just give me, okay, hang on. Trevor, is there someone in South Africa? Actually, there is someone from South Africa. You message me on Telegram, I'll give you his contact, okay? Let me just go back to this. Give me a few seconds. Okay. Give us a few seconds and we'll just do the lucky draw now, okay? Okay. Alright guys, so I have everyone's name who registered tonight in the small, I don't know, pencil cup holder. So all the names are filled in here. I'm just gonna choose the first winner. Okay, hang on. Okay, the first winner is Muhammad Fadli Ojek. Okay, his number is 60890884. Okay, let me just say that again. I'll type it on the chat box. Muhammad Fadli Ojek with 89084. So you're our first winner for the $50 deposit bonus. Okay, let me just, okay, let me just write it down, type it down instead. Okay, Come on. 6. Okay. Let's go through the next one. Let's see who's the lucky guy. All right. Let me see. Okay, I get Anna. I have a feeling this person is from the Philippines. Anna with 6086417. Okay. Let me just Anna 6086417. Okay, that's our second winner. Okay, let's go through the final one. I think I'll let my admin to do the shuffling. Izan, you take one. You choose the last winner. Okay. Siapa? Alright. Let me see who's the lucky guy. Okay. I think it's a lucky girl. Hazika B. Alright. Hazika B 6089571. Alright. Hazika B 6089571. Okay, don't leave first, guys. I will add another 2 more winners. Okay, 2 more winners of $50 worth for you guys because I'm feeling happy tonight. So I'll add another 2. Okay. All right. Let's see. All right. Okay. I have Abdul. Sorry, let me just see. Abdul Halim. I think from Malaysia. 86081 687. Okay. 6. Oh my goodness. Okay, let me just write it down. Abdul Halim 6081687. Okay. And finally, the last one for tonight. Again, my admin, come on, Izan. Maybe somebody. Thank you. Alright. So for the final winner, who can it be? What? For our final winner, let me just open it. Okay, I like this name already. Ambrosio. I don't know where is he from, but I'll just write it down. Ambrosio 686088307. Okay. Can you guys contact my admin after this so we can we can set your accounts, and later on you guys can check your accounts. There will be a deposit of 50 USD dollars. And if you want to use that to join our copy trades, then just tell my admin. I think that's it for tonight, everybody. Thank you so much. And we'll do another webinar again next week on support and resistance. Oh, Ambrosio from Philippines. What about Anna? Where is she from? Okay, I think that's it. Thank you very much.